Welcome to my channel. I'm the cover call guy, and this is my journey to creating a $120,000 per year passive income portfolio. It currently yields just about 70 grand a year, just a little about roughly about 6,000 a month. I'll be reaching my goal strictly using cover call ETFs, and when I'm close to reaching my goal or when I reach my goal, guys, leave me a comment below, what I should be looking for. Besides cover call ETF, I'm very open-minded. I'm open to new ideas, and I would love to learn a few new things and do my research. So maybe you guys could give me something new. All right, legal disclaimer. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risk, including loss of principal. Always do your own research and consult a licensed professional before making financial decisions. I'm just some random idiot you found online, and I could be completely wrong. All right, with that out the way, let's get started today on a up and coming, very popular crypto ETF that pays weekly. Ticker symbol BLOX, BLOX ETF. A deep dive, right? This analysis is of the Nicholas Crypto Income ETF, right? The strategies, the holdings, the performance and risk portfolio, right? All right. Always read their prospectus, right? Read the fine print, right? What I found was a core conflict. The fund's primary objective is capital appreciation, but its current income strategy, selling options, inherently caps appreciation. So I'm not sure how they're going to do it, but at the moment, if you go year to date, they're up about almost 18%. 6 months out, they're still up about almost 18%. 1 month out, now they are down. 5 days out, they are down. 1 day out, they are down as of November 2025. Max all time, they're up. So let's see how well they do. They also talk about return of capital, right? That's perspective explicitly warned that distribution may consist of ROC, which is a return of your capital, not profit, right? It could hurt the NAV, but at the moment the NAV is fine. NAV erosion, the fund states that ROC distribution would decrease the fund's NAV and trading price over time. Okay, over time is the key word here. And they also mentioned derivatives risk. The fund's complex option strategy, selling puts and calls, can lead to substantial losses. They also let you know that the fund is legally non-diversified, meaning it's highly concentrated in a small number of correlated assets. So once you read that, you have to figure out, well, is it worth looking into? And I still say yes. It is good to put on your watch list. So, it's on my watch list. I want to do this deep dive and see if I would still want to own it, and see if you still want to own it. Key vitals and market receptions, right? It has a expected distribution rate of 36% as advertised, right? Backward looking, which is not guaranteed, right? They have a 30-day SEC yield of minus 0.82%, right? Standardized net income. This is a critical gap, is explained by the fund structure. They're not hitting their yield so far. So where does the payout come from? If it stays negative, that means it's coming from the NAV, right? Their asset under management is 214 million. So this is extremely quick and fast, right? Fueled by strong inflows of 186 million in the last 3 months, right? Of course, it's driven by yield chasing, but money has been pouring in, so it's very liquid. So a lot of money is coming in. So we have to see how well it stays flowing in and how much it grows month over month. All right, you have to keep your eyes on that. Fund's objective, right? The version 2.0 model. The core conflict with this is that the fund's objectives are intention, right? The primary objective is to seek capital appreciation. The secondary object is to seek current income, right? The income strategy selling options inherently limits capital appreciation, right? Placing the fund structure in direct conflict with its primary goals. So that was a little confusing to me. I'm not sure how they're going to do it, but we'll see. We'll see how they execute their own strategies. All right, so they have this thing called the version 2 hybrid model. BLOX is not a simple cover call fund. It is a complex, actively managed hybrid vehicle with 3 core components: the equity, the crypto, and the options. Right, so the equity is shares of crypto related companies, the crypto portfolio and direct exposure via Bitcoin and ETH. All right, and then at the option overlay, this is the income engine, applies to both sleeves. All right, this is the 3-sleeve engine, right? The prospective targets is what they put out. Sleeve 1 is equity, 20 to 50%. Invest in crypto industry companies, right? Miners, trading platforms, payment processors, companies with crypto on their balance sheet. Sleeve 2, crypto, 25 to 50%. Right, no direct crypto assets. Right, this mitigates regulatory risk by only holding shares of U.S. listed ETFs and ETPs. And then their sleeve 3 is options, 20 to 50%, consists of derivative contracts used to generate income. This sleeve is collateralized with cash or UST bills. All right, let's check out their portfolio allocation. Right, it's just a quick snapshot. It's nothing in detail. It was too much to put, so please, you can just go on their website and you can see the allocation. Right, at their allocation as of November 4th, what they put out, 2025. This snapshot highlights the fund's active, non-diversified, and concentrated nature. The U.S. equity is about 60%, crypto is about 20%, cash is about 16.5%, and the non-U.S. equity is about 4.5%. All right, the active options strategy explains how they use it, right? Their complex income generation. This is not a simple cover call strategy. The managers actively deploy multiple strategies, right? On the sleeve, equity sleeve end, they selectively writing calls or put spreads, right? On the crypto sleeve, they're primarily selling put spreads, but selling both calls, capping the upside, and puts, taking on downside risk. The fund collects premiums from 2 sides, right? And then there's the greater participation differentiator. BLOX strategy is designed to allow for greater participation in asset appreciation compared to its peers. This indicates managers are not mechanically capping all the holdings. They are likely, what they're most likely doing is selling further out of the money options and selectively avoid writing calls on assets they believe have short-term upside. So this, where the confusion was on page 2, this is how they might be trying to capture some capital appreciation on the out of the money options. And this is just their top 10 holdings, right? Holdings as of November 2025, reflecting the 3-sleeve strategy. Note the large cash equivalent position is for options collateral, which is their T-bills. And you can look at the screenshot here. All right, and all the holdings is 50%. Right, they don't have, it's pretty kind of spread out, and that are big all the holdings is makes up half of the holdings, which I couldn't put all. But if you want the full snapshot, it is in their fund disclosure. All right, competitive expense ratios. The cost comparison, right? BLOX 1.03 ratio is in line with active pairs, but far higher than passive spot ETFs. Deconstructing the weekly income, right? This is a weekly payer, right? It's advertised as a 36% annual yield. It is, again, backwards looking annualized calculation of the most recent payout. It is not a yield and not guaranteed, right? The 30-day SEC yield is minus 0.82%. The SEC mandated standard calculation of net investment income. This negative value confirms the payout is not from dividends. If the fund isn't yielding income, where does the distribution come from? Right? The source of the payout good or bad, right? Source one is option premiums. The fund harvests premiums from selling options. This is the income part of the strategy. This income is variable and depends on market volatility. It is taxed at a high ordinary income rate, making it highly tax efficient. Source two, which is return of capital, ROC, right? This is bad ROC. The fund distributes a portion of your own principal back to you. This is not profit. It is a destructive refund that erodes the NAV. All right, one recent payout was about 40.90%. Strategy relying on high ROC is not sustainable for long-term growth. All right, so the key risks, right? Return of capital and NAV erosion. What is capital decay? The perspective warns that ROC distribution would decrease the fund's NAV and trading price over time as the fund pays out its principal, right? BLOX 2 defenses to this is that the fund is designed to fight this erosion better than its peers, and it has shown that so far. Number one, greater participation strategy aims to capture some of the market's upside to replenish the NAV. Equity portfolio sleeve. This sleeve has its own capital appreciation potential, right? In my conclusion, while BLOX has defenses, it is confirmed to use of ROC, meaning it is not immune to NAV erosion, right? Its long-term viability depends on the manager's ability to grow the NAV while paying the very high distribution, right? So they have been performing very, very well, which is why it's on my watch list, and why they are doing very well with the assets under management, right? Almost 180 million in the last 3 months. That is excellent. All right, competitive landscape, right? The strategy comparison. BLOX, I would say it's a hybrid, right? It's a version 2.0 fund that holds BTC and ETH ETF plus crypto-related equities. It uses a complex active options strategy, puts and calls designed to capture the upside versus YPTC, which I would say is more of a pure play, right? It's a version 1 fund. It just does one thing. It holds Bitcoin ETPs or futures and write cover calls against them, a more direct but simpler strategy. And then there's YBIT, which is synthetic, right? It's a version 1 fund, does not hold Bitcoin ETPs directly. It simulates the position with options, then write calls against that synthetic position. All right, so hypothetical performance scenario, right? We have to always kind of illustrate and give out how it could perform, right? We need to know if it lags or wins or has any type of cushion. So in a bull market, I would expect that BLOX will lag significantly as its upside is majority capped by selling calls. In a flat and volatile market, right? This is the ideal scenario for BLOX, right? I would assume is ideal based on the strategy, right? The NAV is going to be stable, but the high volatility creates high premiums for the distribution. For the bear market, BLOX should somewhat outperform, right? Meaning lose less due to the income cushion, right? But the risk of that is that sold put spreads could amplify losses in a sharp crash. So in a bull market, BLOX most likely will lag behind in much greater than another less complex crypto. In a flat market, BLOX should do well, which is, it would win. In a bear market, BLOX does have some cushion unless it's a sharp crash. All right, key risk, and then I just took this from the Prospectus, right? The derivative risk options are highly volatile, may be illiquid, and can lead to substantial losses. The use of put spreads introduce downside risk, right? Is non-diversified. The fund is highly concentrated in a small number of issuers within a single highly correlated industry, crypto. But if you're investing in crypto, you already know what high volatility is. You already know what diversification is, right? High portfolio turnover risk. The active short-term option strategy generates high transaction costs, a drag on performance, and tax inefficient short-term capital gains. right? This is a new fund, right? Even though a lot of money has been pouring in, it is still a new fund. It doesn't have a good track record. Doesn't have a it has a limited operating history. So it's on my watch list for that reason. Also, I want to keep track of it. I want to see how it actually performs in a downturn. The underlying fund risk blocks bear all the risks of crypto ETF it holds, including their extreme volatility and regulatory risk. But that's pretty much crypto in general. So I wouldn't really be too worried about that one. All right, governance and administration. That this slide answers how is the fund structured, who runs it, and what are the rules. All right, regulatory mitigation. Fund does not hold spot crypto. It only holds U.S. listed stock and regulated ETFs. Right, share liquidity. True liquidity is very high. As you can see, money is pouring in, so we don't have no worries about that. Right, lockup or rendition, none. It is a standard ETF which can be bought and sold at any time market hours. Staking, nope, there's no staking with this one. You don't own it. Fund manager is David Nicholas after the ETF name. Right. Who is BLOX for? Right, this is the investor profile. You have to know who you are and what your investing philosophy and goal is. Right. So this ETF is best suited for investors who critically are investing in a tax advantage account. Right, because you never know if it could be rocked or not. Again, this is good for those in a tax advantage account if I guess you want to do you're not too worried about using the money now. Otherwise, then this doesn't apply to you. All right, it's best suited for those who seek high regular cash flow and accept high risk. All right, those are bullish to neutral and expect a volatile but range-bound market. Understand they are sacrificing most of the bull market upside to get this income. As usual, that is most covered call ETFs. This is less appropriate for investors who are investing in a taxable brokerage account, depending on obviously your income, right? If you're a high income earner and then you have more income, it might not be for you. But those who are trying to live off the income, then yes, it is for you. Then that is, you can ignore that, right? So moving on to the next, less appropriate for investors who want to capture the full uncapped upside of the crypto market. As you see, it's a weekly payer, so for the most part the weekly cover call ETFs will try to maximize premium, so they would have to sell capping the upside, right? This is not for anyone who is seeking low risk or capital preservation income source. Although the NAV has been doing well, and if you bought at inception, yes, you're up. But if you bought recently, then you might be down, right? So this is not for somebody who has low tolerance for volatility or complex derivative strategies. In general, if you're in crypto, right, you have a high tolerance for volatility, right? Crypto swings, and I'll use Bitcoin as example, right? Bitcoin can swing 10, 20, $30,000 up or down. So that is just depending on who you are, right? This is more of a generalized investor profile. You understand yourself the best. So again, this is just for general, purposes and questioning. Or this is really for the newbies. If you're new to the channel, this is how you should really try to understand if this is for you or not. This is just a basic example. You gotta ask yourself more questions. You gotta ask yourself, where do you see yourself a year, 3 years, 5 years, 10 years from now? When are you trying to retire, right? So these are some of the questions you have to ask yourself to figure out who you are and what you want. All right, so we're gonna ask, is this the ultimate weekly crypto ETF, right? So this is a weekly player. So yes, but it's the best in class, meaning it's not the ultimate, but it's arguably the best structured fund for a specific trader, right? It's a version 2.0 hybrid model. Equity plus Bitcoin plus ETH is more robust than its pure play peers, right? So I do love BLOX because of that, right? You're getting both equity plus Bitcoin plus ETH, so you're getting the best of the crypto, right? It's actively managed and provides a better defense against NAV erosion, right? So Is it the ultimate weekly ETF payer for the other half? No. For most people, this is not, right? This is not for people who are typically a long-term investor. Absolutely not. It's a high-risk tactical tool. It is expensive at a 1.03 expense ratio. And at the moment, it is extremely tax efficient, right? And we won't know until it's end of the year. The 36% yield is so far misleading and funded by destructive return of capital, depending on when you bought the stock, right? It is designed to underperform. In a bull market, you are selling your upside. All right, so this is my verdict, right? BLOX is a high-risk, high-cost tactical tool for sophisticated traders in a tax-sheltered account. It is not a suitable long-term holding for the average investor seeking simple crypto exposure. So, personally, for me right now, it's on the watch list, and the only crypto ETF that I would touch and own is BTCI. This is so far on my watch list because it is a weekly payer, and I'm trying to find a solid top tier weekly payer. And right now, this is not it. I'm keeping my eyes on it. I'm seeing how the NAV recovers, and if it can recover, then I will probably nibble a little bit, and I will see how it does then. But at the moment, I am sticking with just Bitcoin ETF pure play, BTCI. And please, that's the end of the video. That was my verdict. This was my deep dive. Subscribe, comment, like. I appreciate all in every comment. I try to reply to all of them. And I hope you guys learned something from this video. I appreciate it. Stay tuned.